Hello friends! If you're looking for a profitable trading strategy, this video is for you. In this episode, we will show you 3 simple yet effective trading strategies that provide a steady income. We've selected 3 successful traders who shared their proven methods and demonstrated them in action. Don't forget to subscribe to the channel and give us a like so you don't miss any new helpful videos. So, the first trader earned $1,300 using a simple strategy.
In today's video, I will be trading with a strategy that uses the stochastic indicator and the Keltner channel. In other words, this strategy consists of 2 indicators, which together provide much more reliable signals than if you were using just one. And as I've said more than once, thanks to this strategy, I've earned over 5 million rubles to date. And while I'm setting up these indicators, let me remind you that the link to the platform with a 50% deposit bonus will be in the description below the video.
If you haven't registered on Pocket Option yet, and start earning.
So, in the stochastic indicator, we change the first value to 5. For the Keltner channel, we only change the design to make it a bit easier on the eyes. This is purely a personal preference. You don't have to do this. It's just more convenient for me this way. Now let's talk about how to trade using this strategy. If we're considering a trade to go down, you enter the trade when a red candle appears on the chart, bouncing off the upper line of the channel. At the same time, the stochastic indicator is exiting, or you could say crossing the 80 zone. Here it is, the 80 zone. I won't go far. If, for instance, a green candle appears bouncing off the lower line of the channel, at that moment the stochastic should, by analogy, exit the 20 zone. An important point, this strategy works most effectively in horizontal movements. In other words, as you already understand, it is not very effective to use it during trends. I would even say you shouldn't trade in them at all. So how do you find entry points? It's simple. Scroll through the assets and look for a situation similar to the one I showed. If you find one, click right away, execute the trade, and take your profit. At the moment, I don't have such a signal, so if something comes up... Oh, by the way, here's the situation we need. I can see that the signals are already there. I'll try to work with it now. For now, I'm entering a trade based on the signal to go down. The trade ends in profit. Everything is pretty logical, everything should be clear. There's a pullback red candle from the upper channel line, and there's a crossover and exit of the stochastic from the 80 zone, and the price continued to fall according to the signal. Even, by the way, despite the fact that there was a support level below which carried a high risk of a rebound. Although, maybe that's exactly what will happen. And I'll keep looking. I'll stop at this asset. It's a nice horizontal movement. There's already a green candle from the lower channel line. The stochastic, accordingly, will also give a signal. It's clear here anyway that there will be a signal, and the candle, in fact, might jump even higher. So I'll go ahead and make the trade. The situation has once again worked out positively. The first 2 trades, so to speak, I made at the peak, and the last one I caught at the very bottom. So basically, here's the pullback candle, here's the stochastic breakout, so all the conditions for entry are in place. Yes, because of this candle, there were some small jumps, which caused the first 2 trades to fail. But then I caught the very bottom, as you can see, and in the end, I came out ahead. I made 1100 net. Excellent. Alright, let's keep going. So guys, I found this asset. The interesting thing is that there's basically a pullback candle, and on the stochastic we also see an exit from the 80 zone. But the price went up. In my opinion, it's good that I was a bit late, because now I can enter from this nice peak. And as a result, the trade ends up in profit. Everything turned out just as I expected overall. Here's our candle pulling back from the upper line of the channel. Here's the moment when the stochastic exits the 80 zone. So what's the advantage in this situation? If I had entered a bit earlier, right after the pullback candle closed, most likely the trade would have failed and I would have had to use a recovery trade. But in this case, there were actually signals from both indicators. The price spiked up at that moment, I caught the peak there and successfully entered a down trade. So just keep that in mind. I found an asset, the pullback candle is just ending, and on the stochastic, we also see it coming out of the 20 zone. There's a signal, so now it's just a matter of working the situation and taking the profit. The Holland Taustukahandora trade confidently closed in the green. I didn't manage to record the last few seconds, but everything was clear anyway. At this moment, the stochastic started to come out of the 20 zone and there was a pullback candle, after which I entered a buy trade. Unfortunately, the price started to drop further. A bit lower, I entered again, and with the very last recovery trade, I caught the absolute bottom and the price finally bounced back, closing the situation in profit. Let's move on. A red pullback candle. The stochastic also mirrors this movement and moves away from the 80 zone. The decline is very sharp, and actually, after such impulsive candles, it's dangerous to enter, because pullbacks often follow impulses. But nothing ventured, nothing gained, there are still signals. I'll wait for this candle to finish, maybe it will bounce back a bit more. And now there's already a small bounce. From here I think it's time to enter the trade. The trade ends in profit. Here it worked out exactly according to the strategy, without using any martingale. Here is our upper Keltner channel line. a red candle formed precisely from it. At the same time, the stochastic indicator crosses its lines and reverses from the 80 zone. And as a result, the price moves downward. But overall, the situation was undoubtedly ambiguous from my point of view, since there was an impulse and the channel itself in which the price was moving was narrow. But it turned out the way it did. The trade is in profit and the balance is already $21,300. All in all, the trading system turned out well. The net profit from it is $1,300.
If you liked the result, give it a like. And now we move on to the second trader, who managed to earn about $1,000 by applying his own Kato strategy.
So, let's add this indicator, double-click on it. After that, two identical stochastics appear on the chart. The first one is the main one. On it, we change this value to 5. The second one is the slow filtering stochastic, and on it I change this value to 20. It filters out any noise from the main one, just so you know. But now, a bit of introductory information for beginners. How do you make trades using this strategy? Watch and listen carefully. You enter a buy trade when both stochastics at the same time either break through or bounce off the 20 zone. Accordingly, the price started to rise. You enter a sell trade when both stochastics do the same thing, but by breaking through or bouncing off the 80 zone. Here is the 80 zone. And in this case, we see that the price went down. So the idea is that both stochastics should give the same signal. Moreover, these signals must be identical. The fast one should not overtake the slow one by much. If the fast stochastic gets too far ahead of the filtering one, then yes, the general direction might be correct, but the price will most likely be very noisy or go into a correction. And essentially, it is this similarity in the movement of both stochastics that affects the quality of the signals. If you want the clearest possible signals, then you should also expect the most identical breakouts. So now I'll go through the assets, find a suitable one and start trading with it. Well, for example, let's take the British pound against the yen on the 1-minute chart. There's already a signal. And on the 30-second chart, the situation is the same. The signal is already playing out. Now let's take a look at the 2-minute chart. Here, the filter hasn't reached the 80 zone yet. But since I trade on the 1-minute chart, my priority is the 1-minute and 30-second time frames. And judging by those, it's safe to enter a trade. The trade ends, at 0. 0, meaning a return. But honestly, that's not bad either. After all, it's not a loss. So what happened here? Looking at the stochastics, we can see that the signal is still there. Maybe I entered a bit late and this candle seems to have made a false upward jump. But in any case, the stochastics are still showing a signal. And while the price has gone up, this is the best moment to make a trade. Well, in the end, we got what we wanted. We ended up working the situation into a profit. Breakthrough of the main, breakthrough of the filter. The second one stalled a bit here, but that's understandable because of the sideways movement. That is, the price started bouncing in place. But I caught a very good peak from which the decline began. So here the decline has already started. There's a breakout on the main and on the filter as well. Yes, the filter is still tied to this candle for now, but I think the decline will be active since the price has already started falling from the peak. The trade ends in profit. All the signals are there, both on the main and on the filter. But on the second one, of course, the breakout is a bit late. I'll find the next entry point. I won't have to look long. A suitable asset appeared on its own, and just like in the first situation, the pass rate is high here. Why? Let me explain. On the 30-second time frame, the stochastics broke through the 80 zone and are heading down. What about on the 1-minute chart? Here it's the same thing, even clearer. And that's a very good confirmation that the price will go down. So I'm entering a trade for a decrease. Another trade ends in profit. Let's take a closer look at the situation. Here are the 80 zones, which the stochastics were supposed to break through or bounce off. On the stochastics, these signals are present, and according to them, the price moved down on the chart. Also, you can clearly see the strong resistance zones. At the top, here's the line, and at the bottom. Within this channel, the price jumps from one zone to another, and it's in these kinds of channels that the strategy works best. Here's an asset. What stands out is that the stochastics and the chart are moving in sync, which potentially increases the probability of a successful trade. But the signals are already there, and now, as the price has risen, this is the perfect spot to enter a trade. The trade ends in profit. That turned out to be pretty interesting. Usually something like this can happen on higher time frames. In case you missed it, there was a 1-second drop down that didn't even show up on the 1-minute time frame. So, I've found a good asset. Both stochastics have already broken through and exited the 20 zone. And the price has already risen quite well according to them. So, to avoid dragging this out, I'll enter here with $200 for an upward move.
Well, the trade ends in profit, another 180 added to the deposit, and now the deposit is already at $29,800.
And finally, we have the third trader, who turned $20 into $1,000. Let's watch his trading session.
The chart type is Japanese candlesticks. It's with this type of chart that we're trading today. The interval between the candles is 1 minute. Next, our time frame should match the interval time between the candles. We also set it to 1 minute. After that, the most important thing is to set up our indicators. We go to the indicators tab and add Bollinger Bands and MACD. Now let's set up the Bollinger Bands. Set the period to 13 and the deviation to 1.2. Next, we change the appearance. Select the middle line. Set the top to blue, 2 pixels wide. Then set the bottom to pink, also 2 pixels. And set the background to gray and reduce the transparency to make it easier for us to analyze our chart. So, we've set up the first indicator. Now let's move on to the MACD. Set the fast period to 10. Then the slow period to 20. And the signal period to 14. Next, the appearance. Set it to 2 colors, blue and purple. For both the MACD and the signal line, set the width to 2 pixels. So we've set up our indicators, configured all the trading tools, and now we're moving on to actually trading. We go to the EUR GBP currency pair and open a position for an upward movement. Now I'll explain why I opened it. We can see that the chart has moved above the Bollinger Bands line. It has broken through the chart. That's our first signal. The second signal comes from our histogram and the 2 lines. They are above the 0 period line, and that's our second signal. With these 2 signals, we confidently opened our entry point for an upward movement. Right now, there was a very unpleasant rebound, which suggests that the trade could also close at a loss. But a third green candle appeared, which is gradually moving upward. And most likely, yes, our position will now close in profit. So our balance is now $38.40. Let's move on to the next currency pair, ATNI. Entry point for an upward movement. Now I'll explain to you why I opened this entry point. So we can see that the chart broke through the blue line and started moving upward. That's our breakout and the first signal. Next, the histogram, which has been above the 0 period line for a long time, is just you. And also the 2 MACD lines, which again have crossed above the 0 period line. We have these 2 signals and confidently opened an upward position. We opened a position on USD DZD. Again, let me explain. The exit point, by the way, is now on a downward move. The situation is the opposite of the previous ones. The candlestick should break through the purple Bollinger Bands line, and also on the MACD, a trend is emerging below the 0 period line. This tells us that there will be a decline here, meaning a bearish market is about to break out on this chart in this situation. So for now, we continue our trading. We just deposited the $73.73 and almost 3, 2, 1. So our balance is now $141 in total, starting from just $20 bucks. $20 is just 2,000 rubles. I think everyone has that much. Alright, I won't ramble on. We've opened a position on the AUD-CAD currency pair. The entry point is for a decline. We can see on the chart that the MACD has crossed the histogram and it's been below the 0 line for a long period already. Also, on the Bollinger Bands, the chart broke through the purple line and moved below this indicator. This is a very strong signal for a decline, and most likely we'll take it because a long-term bear market is forming here. This tells us that we have 5 seconds left until the close, and we're taking $271.80. Again, let me repeat, this is all from just 20 bucks, dear friends. That's 2,000 rubles up to 27,000. I think that's really good. So the currency pair is Australian dollar to NZD, a position to go up. The histogram is in a long-term upward movement, and the Bollinger Bands themselves have also moved below the chart, while the chart has broken out above the Bollinger Bands indicator. It's all very simple. Again, I can repeat, dear friends, how this strategy works. We see that we open an entry point for an increase in the case when the histogram is on the 0 period line. And also, for an entry point for an increase, we need to see that the chart has broken through this blue line. With these 2 signals, you open an entry point for an upward move. The situation is similar for a downward move. Only now, as we can see on the screen, when the chart breaks through the purple line downward, and also when the histogram is above the 0 period line, these 2 signals let us know that there will be a downward move here. That's how our trading works. Everything is as simple as possible, and any beginner will understand it. In my opinion, this is the simplest and most effective strategy on the CIS market. So we gradually take our final exit point. We have $1,000 in our balance.
We are an affiliated partner of Pocket Option, and by registering on the platform through our link, you get our full care and support. If you enjoyed this video and want more videos with the best trading strategies, let us know in the comments. Your feedback will help us create even more useful content with the most effective trading strategies.